What we're talking about right now is Tesla is ready for prime time as an EV and AV manufacturer.
It's not a major position for us, but in our view, the company is likely to go bankrupt. Company's likely to go bankrupt. Company's likely to go bankrupt.
What's up, guys? Ben here, and welcome to Motivation to Invest. Tesla is a fantastic stock which has defied critics and is now defying gravity. After smashing its quarterly earnings, its share price is up at over $1,500 per share. Due to its recent turn to profitability, Tesla could be included into the S&P 500. This will mean every single S&P 500 index fund, such as those by Vanguard and iShares, would have to purchase Tesla stock. Thus, a vast amount of capital will be introduced into the business, causing the share price to rocket even more. However, the bears say that Tesla is a bubble, it's dangerous and could crash very soon. So who's right? Is Tesla stock a bubble, or will it continue going to the moon? Well, only time will tell who is right. But in this video, I'm going to reveal an exclusive interview with Ron Baron, a billionaire who's been bullish on Tesla since day one. He thinks Tesla will gain $1 trillion in revenue and the stock will 10x. So do you wish to know why he thinks it will rocket to these crazy prices? If so, let's dive in. Welcome back, guys, to Motivation to Invest. Before we get started, it would really mean a lot to me if you guys can give this video a big thumbs up. That helps out the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into the video.
We're joined by star investor Ron Baron. He's been a firm, longtime supporter of Tesla, which is, of course, one of the year's hottest stocks. In fact, Ron first told us about the company's potential back in 2014.
The opportunity here is not for them to do 35,000 cars on the way to 50 or 100,000. The market is for 100 million cars a year. Like maybe they could do in 8 or 10 years, they could do 1 million or 2 million cars a year, but the potential, they could do 10 million cars a year in 15 years. So the potential is enormous.
And what a ride it's been. That stock soaring more than 80% so far this year. That's right, this year. And by the way, it's only February 4th today, so you're talking about 80% gains over the last month and a few days. Tesla's market capitalization is now $140 billion. It passes names like Lockheed Martin, Union Pacific, Eli Lilly, and Costco at this point. Ron Baron is the chairman and CEO of Baron Funds, and he joins us for the hour. And Ron, it's great to see you.
Thanks for inviting me.
Let's start with the obvious, with Tesla. This is a major holding for you.
2014, when we were buying our stock, about 1.6 million shares at an average price of $219. And as you know, since I've been on the show several times since, the stock went between 350 and 180 and 250. So it's all over. And that period of time was when this company wasn't profitable, was expanding rapidly. They were being criticized by short sellers. It was very difficult for them to get started because dealers would try to prevent them from selling cars in individual states. But now things have all come together. And but in the period of time since 2014, the stock price didn't change very much through last summer. So through last summer, our $219 stock was $230, $240. So we made 10%, 20%, 30%. At the same period of time, the company's business, we focus on business, not stock prices. The company's business had grown from $2.8 billion of annual revenues to $25 billion of annual revenues, eightfold. So the company's up eightfold, stock's up 20%, 10%. Now what's happening, this is just catch up. Now this year, Tesla is going to do somewhere around $32 billion of revenues. And I guess that they're going to do $100 billion of revenues within 4 years. And I think they have potential for $1 trillion of revenues within 10 years. So basically, you're looking at the very start of what's going to happen with Tesla. This could be one of the largest companies in the whole world.
$1 trillion in revenue in 10 years?
That's assuming you do 10 million cars. There's 90 million cars or 95 million cars that are sold, yes. And that's without the battery business. So I'm thinking that we're thinking $750 billion to $1 trillion of revenues just on the car business. Elon says that the battery business is going to be as big as the car business. In addition to that, when I'm thinking about 10 million cars a year, the last conversation he said it was 20 million cars is what he thinks he can do. And so what we're talking about is a business that right now, demand is overwhelming for the product that they're selling. And they're constrained as far as making as many cars as they could sell because they don't have enough batteries. So now there's a nice announcement today about Panasonic making money in the plant they have in Reno. But they need to have more batteries. So they're going to have a battery day in a few months. Where they have all the analysts coming out and they're going to show how they're addressing the issue of where are these batteries going to come from to make all these cars that are possible to make.
You're clearly still very bullish.
Yeah,
but it's moved 80%. It's moved 80% since the beginning of the year. Just in terms of discipline in maintaining a portfolio, do you lighten up on any of that position at all? Because you think, I still have a large position, even if I sell a little and book some gains. Or no, you're holding the whole thing.
Not a share.
Not a single share.
No. And in fact, one of the portfolio managers was speaking to me yesterday, and he said, Ron, shouldn't we sell a little bit? I said, I'm not selling anything. This is the very beginning of when Teslas get started.
So here's the question.
I'm hoping we get more assets so we can buy more
make
stock.
it the #1 car maker in the world.
Well, I think Toyota's
about 10 million now.
A little bit more, 12 or 13 million. But a lot of those companies are. I'll deal with the competition in a moment. But go ahead.
Well, no, so that was my question. I was putting Toyota in the 10 to 12 million category. Effectively, Tesla has to become the next Toyota for this.
Yes.
The numbers to be what they are.
Yes.
And so the question is, how you consider the competition and why you're so convinced that they will be the next Toyota, if you will.
So, and how come the other automobile companies can't just crush them? Why can't they do that? And there's two big issues that the existing automobile companies, let's say they sell 90 million cars a year, and let's say it costs $5,000 of capital spending per car in order to make 90 million cars a year. So they're invested $450 or $500 billion in their existing facilities. That's making, probably 40% of that is making motors. So basically, when you're transferring from an internal combustion engine into a battery, so here you're Toyota, or you're General Motors, or you're Ford, and I come along and I say, hey, listen, we don't need to make those engines anymore. Let's use my battery. And you've already got these, $200 billion invested in engines. Are you going to really stop that? So that's one challenge for automobile companies. In fact, the automobile manufacturers in Germany were fined by the regulator saying, how come you're not moving faster on making electrification? The reason they're not, of course, they're going to obsolete all those investments they have. That's stranded assets. So number one, financially, it's very difficult because they have to invest as much in making electric cars as they're going to have to write off in motors. And where's that money coming from? That's one. Number two, the challenge is that the dealers distribute these cars all around the country, franchises, irrevocable. And the dealers make money not on selling metal, but on servicing the cars. So if you have all of a sudden a replacement, and that's all the distribution, and if you have all of a sudden a replacement of engine that has all the service requirements with a battery that doesn't have any, and you have the parts that are so few compared to thousands on a regular car, why should a dealer, when you call up your dealer and say, I'd like you to sell the electric cars instead of the gasoline engine cars, what are they going to do? They don't make their money that way. So they have to totally revamp the whole strategy.
Incentive system.
Yep.
You saw this long before anybody else did. Now there are all these analysts who are kind of jumping on board with this. But as an investor, he said you should be congratulated for what you saw so early. But he does have a question. He says at today's valuation, it's going to take a long time for the cash flow to catch up. At what point do you think the valuation is too far ahead of the medium-term cash flow potential?
Well, at the last conference call, Elon noted that I'll get to that in just a moment. Elon noted that the demand for the Model Y is going to be greater than the Model S, X, and 3 together. So that's number one. So you have that big increment of demand coming on. Number two, Cybertruck, he said, is going to be in such demand they can't foresee how they can meet demand for 3 or 4 years. So that's another one. Then they have the big 16-wheeler truck. That's going to come on sometime. Then you have autonomous driving. That's going to come on sometime. Then you have the replacement of the peaker plants for utilities with these massive batteries. That's going 100% a year. That's going to come on sometime. And then 10 years out, there's still a lot of growth coming because you're going to have these autonomous fleets of cars. And then in addition to that, you're going to have logistics business like Amazon has. So basically, it's not just the next 10 years it's going to be this phenomenal growth. You have years after that. And we're talking about a business that's growing 50% a year. So if I'm thinking that in 4 years they're going to do 100 or 120 or 130 billion dollars of annual revenues, and say they make a 15% profit margin, operating profit, that doesn't mean they're reporting it because they're going to take money and spend it to grow faster. So we make a lot of money by investing in businesses that are building factories, that are launching satellites, that are building hotels, casinos. And so while they're building them, they're not making money from those investments. Tesla would be building factories, and that's when we're investing in it, when that's happening, and penalizing profitability. So how much is this worth? If you have $15 billion of profitability, so-called, in 4 years, why wouldn't that be worth $300 billion in 5 years, 4 years? And then on top of that, if you get out to, I forgot the roofs, the solar roofs, that's another $40 or $50 billion business a year. And that's just starting as well. So there's all these increments, and the demand is growing so rapidly. He says that he's going to grow 50% a year, 50% a year for as long as the eye can see.
Do you care? They say that they are now building towards profitability. They've been profitable to this point. Do you care if they don't have profits from time to time? Do you care if it's not a straight profitability shot? Are you okay to stand by with that?
Well, he's got $6 billion in cash right now, and up from $5 billion in cash at the end of the prior quarter. He generated, after spending a lot of money, generated $1 billion of excess cash right now. This company also, it's the only growth company in the industry. When he bought the plant in California, in Fremont, it was bankrupted by General Motors and by Toyota, and it was $1 billion plant. He got it for $50 million, 50. Looked at it and said, I don't know what to do with this place. What's going to go on here? And so then they spent on it originally, and they didn't know how to make cars so well, and they spent $15,000 of capital for every car they're going to make. Right. And that investment is producing a gross profit of about $10,000 a car for a $50,000 car. In China, now they know how to do it. And in China, the factory there cost $4,000 a car for capacity. That car, that they're going to sell it for less there, maybe in the 40s instead of close to 50, but they're going to make $10,000 in profit a car. So the return on investment is amazing. And then in addition to that, the suppliers are so anxious to do business with Tesla, they give them terms. You don't have to pay for what we're giving to you for 60 days. And they, from the time they take an order,
they give them those terms, or Tesla forces those terms on them?
Well,
I'm guessing they're not offering them up.
I'm guessing they're an institution. They're trying to make money. Right. But the suppliers give them 60 days. And our guy, from the time he takes an order to the time he gets paid for it, after he makes the car and delivers it, is 30 days. Right. So basically, the suppliers, he's got negative working capital in this business. So Rick, what's it going to be worth? I mean, gee, I can't see how. Now, of course, you can see, but my idea is that in 10 years, this is going to be at least $1 trillion of revenues, and it's nowhere near ended at that point in time. There's a lot of growth opportunities from that point going forward.
Have you ever doubted in the story along the way since you've been an investor?
Well, I told him originally, and I'm sure I told everyone else as well, that I wasn't sure if it was going to be successful. I gave it a good chance. Initially, I thought it was unlikely when he came public at $30 or $35 a share. Changed my mind when I realized I was wrong and the stock had gone from 30 to 80. And I was out in California with Mike Lippert, and we were visiting one of our portfolio managers. We were visiting with Elon for a couple hours, and Mike had to cut out early. And after he said, oh, my God, Mike, at least you're smart enough to have invested in Tesla. I can't believe I didn't. And he said, Ron, I sold it. I said, you sold it? Are you kidding? After you just listened to what he said, you sold it? He said, I sold it before. And so I watched some more, and I said, I have to own this. And I started buying at 160. So here, at $30, I didn't buy. I started buying at 160, and it took me 2 years. Took us 2 years to buy, and I thought that I was going to be likely successful at that point, even though 50 car companies have failed in my lifetime. I said, this one really has a chance. They sent out a car to my house to East Hampton to drive and see if I could, Anyway, that didn't work out great, but
what'd you do? You hit something?
Did you have an accident?
No, I got into the car, and it was a prototype model. And it was hard to get into it, and I stepped on it and took off so fast. I said, well, how do I know that a truck on the highway is going to see this car? I felt like I'm in a boxcar when I was a kid. And he said, and they said, no, don't worry about this. And they showed me a picture of a 16-wheeler a truck sitting on top of this car to show it's indestructible. And I said, that wasn't the picture to show me. And so I looked at, and so I wasn't convinced for a long time. And then ultimately, I said, boy, I really think this is the case.
But it makes sense.
Just one more thing.
Okay.
And the one more thing is that I said that, whether he's successful or not, I am really glad that I've invested in this company because I'm helping. This guy's saving the earth. This guy's an unbelievable guy, brilliant guy, great businessman, and saving the planet.
Okay.
Overall, I do believe Tesla is a fantastic company, and I believe it has the potential to become an all-encompassing technology giant, including its Tesla cars, batteries, servicing, and even automated vehicles. However, the risk of investing into Tesla right now is this potential is already baked into the share price, and more so. This means should they hit a stumbling block or a few hurdles along the way, the share price could plummet. Every stock has what's called a fundamental component and a speculative component. Tesla's fundamental component at the moment today is okay. It's good, but it's not incredible. Whereas its speculative component is incredible, thus the massive share price. Does this mean the stock can't double in the near term? No. But does it mean the stock could crash in the near term? Yes. And that makes it a risk for investors. So do I own shares in Tesla? Well, you'll know, guys, on this channel I offer full disclosure and I'm completely transparent with the positions I have. Yes, I have a small stake in Tesla, which I purchased back in April 2020. Since then, I've doubled my money. But do I put this down to the company increasing double in value, or do I put this down to the speculative component of the stock? Personally, I'd say it's maybe 70% speculative, 30% on the fundamentals have increased in these few months. Would I buy more shares in Tesla? Yes, I would. But at these levels, I do consider it a higher risk investment. Thus, I would wait for a potential dip in the future. If the dip never came and the stock doubled, tripled in price, I would not have FOMO, as there are plenty of other stocks to invest in. I'll leave a link below for my top 5 stocks which have more than 5x'd in the past few months. These are stocks you've probably never even heard of, but they've still increased by these massive amounts. So what are your thoughts on Tesla? Do you think it will continue going to the moon, or do you think it's a bubble? Let me know in the comments below and I'll join in the discussion. Also, if you enjoyed this video, go ahead and give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.